Welcome back to Real Estate 101. Today we're going to continue our discussion on tax law and talk a little bit about the voluntary disclosure program. And I'm pleased to be joined once again by Eldad Gerb of Devry Smith Frank LLP. Eldad, welcome back to the show.
Thanks for having me again, Joe.
All right, Eldad, so what is the voluntary disclosure program?
Voluntary disclosure is a tax amnesty program. So anytime somebody's filed an incomplete or inaccurate tax return or not filed a return at all, they can use the voluntary disclosure program.
And how big is this voluntary disclosure program?
It's actually pretty big. There's almost 15,000 claims processed or cases processed every year. That's brought over 1.2 billion just last year in 2013 to the Canadian government. It's added tax revenue of over $1 billion.
All right, so who typically does or uses the voluntary disclosure program?
So voluntary disclosure program, if I go based on my client base, really starts people in their early 40s and goes right up to their 70s. It's really part and parcel with good tax planning. So you're thinking about what to do with your estate, or somebody passes away overseas and you have bank accounts and you have things that you've never shown before, and now you're starting to think about planning them, leaving them for your children, and how to show those assets to the Canadian government legally, and those people should be thinking about the voluntary disclosure program.
All right, so what are the benefits to using it?
The main benefit that people use the voluntary disclosure program for is they get penalties waived. So if you don't declare income in any particular tax return, I think as we've discussed in previous episodes, you're looking at least a 50% penalty on whatever the tax is, plus interest on that penalty, and so on and so forth for late filing. If you go under the voluntary disclosure program, all of those penalties are waived and set aside. You do have to pay interest still, but that's it. So in a way, the government is offering the olive branch. You come forward and in return, we'll waive the penalties.
All right, so what does someone need to do in order to have a valid voluntary disclosure?
So like the title says, it has to be voluntary. So if the CRA approaches you first and they call what's referred to as an investigation, or they've taken any investigative steps, it's no longer voluntary. So what does that mean? If Mr. Jones or Mr. Smith gets a letter in the mail that says, hey, how come you didn't tell us about this rental property in Florida or this bank account in Scotland or Portugal? If they initiate the process, it's no longer voluntary. So you have to be first, and of course in exchange, they'll waive the penalties. The other thing it has to do, the second thing, it has to be more than 1 year old. So this can't relate to your 2013 affairs. It has to be something that's at least a year behind and sort of in arrears. So think 2012 and backwards. And the last thing is, it has to be complete. You can't just tell the part of the story that you want to tell. You have to tell them the whole story.
Oh.
So they'll do their investigation after you say, I'm being 100% honest. And once they're comfortable that you are, again, penalties get vacated.
Okay, so what kind of information can be disclosed under or provided under this voluntary disclosure program?
So you can imagine it ranges. So depending on your financial affairs. So we have people showing bank accounts that have been passed down through the family for generations. Again, bank accounts that are typically offshore in Asia, Europe, South America, that have been 10, 20, 30, 40 years old, always accumulating a little bit of interest income and never been shown. When somebody immigrated here, they didn't know they had to show it, so we can voluntarily disclose that. Again, you can have a property, could have been inherited, could have been bought as a rental property, could have been bought with family businesses that, again, was transferred when somebody became an adult. And so think a rental property in Florida that's never been disclosed before, now it's time to disclose it. Think you could have a rental property right here in Toronto, right here in Ontario, that you've just never shown it. You always thought it was too little, you didn't understand how to file. So the interests don't necessarily have to be international, but it's typically bank accounts, real estate, think US securities, stocks that you would trade in Canadian banks, but of US stocks. So you always thought that you didn't have to show it because it's Canadian. So why do I have to show it? But you have to show that too, to the extent that there's income. So it varies to all financial instruments, all asset classes.
All right. Now, is it only if there's income earned on these assets that you have to?
Right. So that's a great question. It's actually not just income. It's income and for assets without income, provided that those assets are actually over 100,000. Because then what happens is you must file information returns. The return is called T1135s. There's actually been quite a bit of discussion about it in the legal community, as this year the government changed the form. It's a lot more intensive. There are a lot more compliance issues, so we definitely suggest reaching out to an accountant, reaching out to a lawyer before going about it. If you have property that's not income, but that is over 100,000 anywhere in the world, Canada or internationally, definitely reaching out to a professional.
All right, so what happens next? What happens after you start and submit all this information?
Yeah, so everybody's scared. They don't want to show something they've never shown before, and it's that fear that prevents them from showing. So we do it in 2 stages. We do what's referred to as a no-name disclosure, and all I have to disclose, I put my name down on the disclosure, and I have to give the taxpayers age and their gender, and that's it. And I submit all of their financial circumstances. So I say it was 60,000 in employment income, 50,000 in business profits, whatever it is, I show everything, and the government conditionally accepts. So the government says, okay, if everything that you show me, if I accept it, is in line with the first no-name submission, we will grant you the voluntary disclosure. We will accept it, we'll vacate the penalties. Why do you want the no-name? It goes back to what we were talking about earlier. You have to secure that date to make sure they haven't started an investigation against you.
Right.
So when you have the benefit of the no-name, you get that early date right up front. And then it still takes 6 or 9 months to go through the whole process. And then once they conditionally accept, which typically takes 2 or 3 months, we submit your name under the protection of that conditional acceptance. We show the bank statements, we show the bank accounts or the real estate property deeds, and we complete the disclosure. You receive new notices of assessment, and you pay whatever the tax
is owing. Right. All right, so how far back can you go with the voluntary disclosure?
So the maximum that the government can go back is 10 years. So because we're in 2014, right up until December 31st, any voluntary disclosures that I file, we're going to be eligible to claim as far back as 2004. And so it's on a calendar year basis. What I will say is, let's say we bought a rental property in 2008. There's no need to go all the way back to 04. So in your case, we're just going to go back from 08 until today, show all the rental income that we earned, again, whether here, the US, or internationally, and file the voluntary disclosure. We'll get the notice of assessment and pay those taxes.
All right, Eldad, so what else do people need to know in regarding the voluntary disclosure program?
So there's been quite an uptick in activity because there's a lot of information about the US looking at Canadians' bank accounts, looking for Americans. They want to know what everyone's affairs are. And it's important for Canadians to know that it's not just the US that's doing that. Canada is all the time entering into new, what they call tax information exchange agreements. And they've now entered into 30 around the world. So governments are asking banks in foreign countries to make sure that they're not just compliant locally, but that they're actually compliant with Canadian authorities if somebody puts down a Canadian address on having a bank account again. Italy, Portugal, the UK, Jamaica.
Internationally.
Anywhere. And so it's important that the government's awareness is on the rise, and it's in that instance important that people come forward now while they still have the opportunity to use the voluntary disclosure program.
All right, Eldad, great stuff. Thanks for coming on today's show, and I'm hoping to see you again sometime down the road.
Thanks very much, Joe.
So there you have it. If you need any more information on the voluntary disclosure program or need the help of a tax lawyer, get in contact with Eldad Gerb of Devry Smith Frank LLP. I'm Joe, thanks for watching, and we'll see you next time.